Bismillahirrahmanirrahim. Assalamualaikum and hi. Today we would like to present about a case study of unprofessional conduct by MIA members. Based on the extract case study above, for the first question, explain your understanding on the case of unprofessional conduct by the members of MIA. Basically, MIA is empowered by law to regulate the accountancy profession, thus making MIA membership mandatory for those holding themselves out or practicing as an accountant in Malaysia. MIA's responsibilities include training and quality assurance as well as enforcement towards its members to maintain professional competency, credibility of the profession and the protection of public interest. Recently, at least 87 complaints received from Registrar Office, 82 complaints forward for investigation, and 61 of them had been investigated and referred to disciplinary committee. In the case of Lim Peng Yang, that had been reported failure to carry out his duties as a professional accountant with due care and diligence for failure to comply the relevant MFRS during the preparation of the financial statement of the company. MFRS is very crucial to comply because MFRS standards bring transparency but enhance the international comparability and quality of financial information, enabling investors and other market participants to make informed economic decisions. MFRS standards strengthen accountability by reducing the information gap between the provider of capital and the people to whom they have entrusted their money. MFRS standards also contribute to economic efficiency by helping investors to identify opportunities and risks across the world, thus improving capital allocation. In the case of Ismail Adam and Yap Oi Kong that had been reported as unsatisfactory and indicated in the follow-up review report, which detail the weaknesses in the audit work performed. According to Audit of Internal Control over Financial Reporting in MIA standards, this standard establishes requirement and provides direction that applies when an auditor is engaged to perform an auditor of management assessment of the effectiveness of internal control over financial reporting that is integrated with an audit of the financial statement. The effective internal control over financial reporting must provide reasonable assurance regarding the reliability of financial reporting and the preparation of financial statement for external purpose. If one or more material weakness exists, the company's internal control over financial reporting cannot consider effective. In the conclusion, members of MIA are advised to strictly adhere to the provisions under the Accountant Act and the rules in carrying out the public practice service to uplift the reputation of the profession and to instill public confidence in the conduct of service offered. Professional conduct is important element when a chartered accountant performs their professional service to ensure conflict of interest will be avoided and not undue influence on their interest of professional service. Then, to ensure primary users of financial information get the fair view, the relevant and faithful representation of financial information provided by chartered accountant. Law Code of Ethics issued by MIA for monitoring, supervise and govern any professional service in Malaysia and reducing the unethical issued when chartered accountant perform their professional service. The unprofessional conduct will impair the usefulness of the financial information provided which will influence the decision making of primary users.
Hi, I will present for the second question, which is question B. In your opinion, what factor influence such conduct? Justify your answer. The term such conduct in the question referring to unprofessional conduct by chartered accountant under MIA. There are two cases which already explained in the first question. So first we'll look at the case of Lim Pan Yan, which stated in the question that failure to carry out his duty as a professional accountant with due care and diligence for failure to comply with the relevant MFRS during the preparation of the financial statement of the company. In my opinion, there are four factors that influence such conduct. The first factor is due to self-interest or for personal gain purpose. The accountant may manipulate the financial statement without complying with MFRS to fulfill the need or desire of himself. For example, let's say if the company performance was poor, the upper management and the accountant may keep the shareholder happy by writing the full financial statement to say otherwise. The accountant could also manipulate and inflate the revenue on the income statement to unethically gain more bonus. Second factor could be complacency about professional standard. Some well-experienced professionals get complacent about professional standard and begin to engage in sloppy practice. When it becomes so secure in their work, they begin to take potentially risky and unprofessional shortcuts in performing the task and completely ignore the professional standard as intended in MFRS while preparing the financial statement. Third factor is due to failure to maintain currency of professional knowledge and competence. The accounting profession keep on evolving with more and more issuance and improvement to the accounting standard like IFRS and MFRS. The accountant should keep pace with the change. Failure to do so will definitely affect their competence with the current professional standard. They will poorly produce the financial statement that does not comply with current standard. Lastly, various environmental factors can also contribute to such conduct. For instance, excessive work demand, lack of mentoring and supervision, and inappropriate workplace practice are all environmental issues that can clog up the flow of professional conduct. Those stressful environment would surely affect the emotion and feeling of in making the right decision and professional judgment. Stress and pressure would also push the accountant to neglect and omit certain MFRS that should be complied in the preparation of the financial statement. Now we'll go back and look for the second case, which is case of Ismail Adam and Yap Oi Kong. Both the case stated that the firm has been rated as unsatisfactory as indicated in follow-up review, which detailed the weakness in audit work performed. Clearly, this is audit-related case, and in my opinion, it could be directly traced back to the root of the problem itself, which is a threat to the auditor independence as the factor of the such conduct. These are some key threats to auditor independence. All these factors may be interconnected with each other. So let's look at it one by one. So again, the first one is self-interest threat. In auditing, this may happen if the auditor holds a direct or indirect financial interest in the company or depend on the client for a major fee that is outstanding. The auditor might tend to be in favor to the client for the sake of their own gain and purpose. The next one is self-review threat. It is when the auditor is auditing his own work or work that is done by others in the same firm. Usually, audit firm also provide other services like financial advisory, consultancy, taxation, and etc. to the company. When it comes to auditing their own work, it is hard for them to evaluate without bias on their own work. They might also refuse to notice or shut one eyes to some mistake that they might omit in their own work. The third one is advocacy thread. This is when the auditor involved in promoting the client to the point where the objectivity is potentially compromised. The auditor should be independent and not to associate with promoting their client. The auditor primary objective should be revealing the transparency of the client to the shareholder and stakeholder, and not to practice in aiding for publicity of the client. The next one is the familiarity thread. This is when the auditor are too personally close or familiar with the employee, officer, or director of the client company. This will lead them to become too trusting of the client and can cause them to make biased decisions. For example, a company audited by the same auditor for 10 years, and the auditors and the client becoming very close friends, the auditor will tend to trust the client so much that they do not take their job seriously. Lastly is the intimidation threat. Some client may try to pressure auditor to influence their judgment. Like I mentioned earlier, all these factors may be interconnected to each other. For example, the client might threaten the auditor for their friendship, or they could also threaten the auditor for their self-interest, whereby the auditor depends on the client for major fees that is outstanding. All this will cause a threat to the auditor independence and resulting in the poor performance of audit. So that's all for my part. Proceed to the next question.
What theory that could be applied on professional conduct by an accountant? MIA Bylaws Code of Ethics. A professional accountant shall comply with the principle of number 1, integrity. It requires an accountant to be straightforward and honest in all professional and business relationships. Not knowingly be associated with reports or information contains materially false or misleading statements, statements or information provided recklessly, omits or obscure required information where such omission or obscurity will be misleading. When a professional accountant becomes aware of having been associated with described information, the accountant shall take steps to be disassociated from that information. Second, objectivity. An accountant not to compromise professional judgment or business judgment because of bias, conflict of interest, or undue influence of others. Not undertake a professional activity if a circumstances or relationship unduly influences the accountant's professional judgment regarding that activity. Third, professional competence and due care. Attain and maintain professional knowledge and skill at the level required to ensure that a client or employing organization receive competent professional service based on current technical and professional standards and relevant legislation, and act diligently and in accordance with applicable technical and professional standards. Serving clients with professional competence require the exercise of sound judgment in applying professional knowledge and skill when undertaking professional activities. To maintain it, it requires a continuing awareness and understanding of relevant technical, professional, and business developments. Diligence encompasses the responsibility to act in accordance with the requirement of an assignment carefully, thoroughly, and on a timely basis. Take reasonable steps to ensure that those working in a professional capacity under the accountant's authority have appropriate training and supervision. Professional accountants should make clients aware of the limitation inherent in the services or activities. 4. Confidentiality. Be alert to the possibility of inadvertent disclosure, including in a social environment and particularly to a close business associates or an immediate or a close family member. Maintain confidentiality of information within the firm. Maintain confidentiality of information disclosed by a prospective client. Not disclose confidential information required as a result of professional and business relationship outside the firm or employing organization without proper and specific authority, unless there is a legal right to disclose. Not used for personal advantage of the accountant or for the advantage of a third party. Not used or disclosed after professional or business relationship has ended. Take reasonable steps to ensure that personnel under the accountant's control and individuals from whom advice and assistance are obtained respect the accountant's duty of confidentiality. 5th, professional behavior. Comply with relevant law and regulation and avoid any conduct that the accountant knows or should know might discredit the profession. A professional accountant shall not knowingly engage in any business, occupation, or activities that impairs or might impair the integrity, objectivity, or good reputation of the professions, and as a result will be incompatible with the fundamental principle. Professional accountants shall be honest and truthful and shall not make exaggerated claims for the service offered by or the qualification or experience of the accountant, or disparaging reference or unsubstantiated comparison to the works of others. In the case of Ling Panyan for failure to carry out his duty as a professional accountant with due care and diligence for failure to comply the relevant MFRS during the preparation of the financial statements of the company. Professional competence. Ling Panyan, as executive director, may not have sufficient knowledge in accounting knowledge, and it is resulted due to lack of understanding with relevant of accounting standard MFRS that result to incompliance with certain accounting standards. Professional behavior. Ling Panyan is breaching the regulation due to not comply with MFRS for the financial statements preparation. In the case of Ismail Adam and Yap Oi Kong, that had been reported as unsatisfactory indicated in the follow-up review report, which detailed the weaknesses in the audit work performed. Objectivity. Adam and Yap Oi Kong judgment may have been compromised as they should not undertake activity with conflict of interest during their audit works. Integrity. Adam and Yap Oi Kong work may have been involved with misleading information and statements. They should withdraw from activity with such information. Strict regulation should be applied and punished accordingly for the negligence to comply. The accountants and auditors should also be retrained and educated with the standards.